All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Friday afternoon, ahead of a 3-day weekend. Market is closed on Monday, so we'll be back here with you on Tuesday. Yeah, anyway, 3-day weekend. It's always a little interesting, in how they play out. I think this one's going to be quite interesting with everything going on with the coronavirus and kind of where the market sits and how it's trading and what this earnings season looks like and what we're seeing from some of the economic data. So it could get interesting very quickly early next week. But anyway, let's go take a look at the challenge. We have one position on the board right now, and it's GOLD, and it is trading at $1.77. So I'll fill that in here. Takes the challenge, about $100 south of 5,000. So, all right, in a decent spot there. And we've been able to kind of get about $1,000 in gains on GOLD here so far. Again, we pulled off 4 contracts this morning, and readjusted the stops and the profit targets. With the ATR method. So we'll hold that over the weekend. But we do have about 3,000 in cash, just under 3,000 in cash, to put into play. Now, we do have a new trigger on the board this afternoon. It's Kohl's. And it's Kohl's triggering bearish. And let me kind of show you the chart here, KSS. And this is a stock that, has had a little rough go of it and triggering bearish here today. Now, I'm not going to trade it. And it has everything to do with the option values. The option values are just, terrible. They're just not very good. You take a look here at, the 42.5 puts, right? They're going for $1.85 to $1.95. So we have about a 5% spread, which, 5% in, 5% out, that's about 10% of your trade right there. And then if we look at the price movement here, and you look at, $2.50, right? Well, if it goes $2.50 in our favor, we'll make about 50% on the trade, minus the spreads, which is, about 10%. So we'll make about 40% on the trade. Well, the ATR on this is $1.20, so we're looking for a $2.50 move. So if it goes my way, I'm making about 40%, right? That's what I'm making there on that option. If it goes against me, well, I could lose significantly more than that, with the trade. So it doesn't make any sense to go out and get it. Just the options do not fit into the risk-reward parameters of the challenge. And one of the big reasons is they have earnings on March 3rd. So earnings are priced into the options. Now, we can get options that are the 28th of February that don't have earnings priced in, but you see they're cheaper. And the delta is better on them, but the spread is much worse. So it's just one of those where I looked at all the different scenarios and possibilities. That just, they just don't reflect a challenge trade. So I decided I'm not going to go and jump into the Kohl's trigger that is out there here today. So we'll go into the weekend with GOLD and cash and go from there. Now, I'm going to go take a closer look at GOLD here with you from a fundamental side. Michelle forwarded me over a couple questions about it from a fundamental and investment side. So we'll go take a look at that in a moment. But before I do, if we look at this week and what this week has been here in the market, and just kind of take a look at some of the weekly charts, right? It's been up about 1.3%. So it's built on last week's recovery, pushed into new highs. And has seen a fairly just gain here this week. If we look at things like small caps, same thing, right? Same thing. If we look at China, the FXI, all right, same thing. Right, things are a little off their high. I know there are a lot of fear factors out there, but overall, it's a fairly decent move here, for equities this week. One kind of area that's been sluggish and continues to be sluggish are transports. You can see transports, they hit a high in the middle of 2018, right? They have not hit a new high again, right? And you compare that to the market, where the market was in 2018, right back here around 270. I mean, the market is tacked on what, 25%? While the transports have gone nowhere. So there's a large divergence there. But, it's one of those where people say, well, okay, tech is the new transports, and tech is doing extremely well, being led, here this week by NVIDIA, which has had a huge monster week here. We see some of the other semiconductor stocks sitting near new highs and whatnot there. So anyway, it's not a week where we can look and go, well, the Bears got advantage here, they got advantage there. No, it's a fairly bullish week. I know the markets are down a little bit today, but we have seen that. Fridays, markets have tended to be down, here of late, but, we continue to see, the bulls in control of the majority of the metrics that are out there. Now, from an investment side, I know some people are of the mindset of, well, I'm only going to buy when the market is, X, Y, or Z, and, they get involved in looking at individual stocks and then say, well, I want to buy this individual stock, but what about the market, right? And get all that kind of confusion in there. That's easy to do right now, especially as we see, stocks diverging, right? We talked about IBM earlier this year, and, I made the statement that I would not be surprised to see it be one of the top performing stocks here this year, right? Market's up this week, IBM's down this week, right? When we look at other stocks out there, there are plenty that are in this situation where they're down this week, and others that are outperforming, the market in a big way. There's definitely performance disparity between the top and bottom in a way that's very typical of a bull market. So anyway, that's kind of my take here on the market. Not a whole lot that I can say, well, there's massive change. Not market is what it is, and the metrics are generally bullish here. But there's still some good risk out there, right? There's still some solid risk out there in the market, as things with the coronavirus could turn at any moment. And I think you can make a pretty good argument that it has not been priced in at all. In fact, maybe even outpriced a little bit, with people kind of going, well, you know what, let's just buy any bad news to be able to get in, and that could, if things flame up, that could affect things, but we'll see. So far, no real sign of that out there. Okay. All right, so let me wrap up taking a look at gold and taking a look at Barrick fundamentally, because, one of the things we see, it's up, 3.5% today. It's up 70 cents today. But if you take a look at its sector, the GDX is flat today. Look at what the GDX has done this week compared to Barrick, right? Very, very different. Gold has gone up a little bit, right? Barrick has gone up way more than gold, and Barrick has gone up way more than its sector, right? And if you look at the challenge watch list, right, there's only one gold stock on this. There's the gold ETF, the GLD, but the only gold stock on here is GOLD, and there's a reason for that, right? And it's one that we talked about last summer, but I'll go through some of it again. There has been some massive consolidation within the gold industry, the gold mining industry, and some of the biggest and best companies have had some nice mergers. And one of the things that those mergers have done is allowed for the companies to increase the margins for these miners, right? Because when you think about it, we're not talking about an industry that's innovative, right? It's not like Amazon going out and saying, okay, we're going to innovate. We're going to build this thing called Amazon Web Services, and it's going to drive business from here and here and here, and it's going to drive profits to our They don't have that, right? They have, well, here's a mountain, and we're going to dig for gold, and we're going to pull some gold out. We're going to refine it down, extract the gold out of the rock, and sell it. It's a business that has been the same for a long, long time. And yeah, sometimes there's new mining technology and everything else. But this is not an industry that you look at and go, "Oh, what's the new innovation this week?" Right? And so when you look at things fundamentally, right? And here's gold. You could take a look at the PE ratio, and okay, whoop-de-doo, it's not going to give us anything. You look at the price to book value of it. It's trading at 1.6 times book. All right, that's not super high. It's not super low. It's all right, whatever. Price to sales, right? The price to sales is 3.5. Okay, that's not super high. That's not super low. It's not anything where we look at and go, well, when it has a low price to sales, it tends to trough when it's high. No, there's nothing like that. And if you look at the revenue, okay, revenue's going up. Right, revenue has started to turn on up and in a good way, and some of this is because of the acquisitions they have made, right? But when it comes down to looking at the gold miners, I do not believe that looking at them in a vacuum does any good. Meaning, to compare Barrick to Barrick, I just don't think matters at all, right? And when I look at most stocks like Boeing, I'm comparing Boeing to Boeing. I don't care what Boeing looks like relative to United Technologies and Lockheed Martin. I'm comparing Boeing numbers to what Boeing's numbers have been historically, right? And you see me do that a lot, and I bring up Y charts to do it, and I'll continue to do that for most stocks. But when it comes to gold miners, it's to me it's a matter of the best in the group, and the best in the group sees money come in, and the worst in the group see money go out. And as things change on a relative basis, meaning as Harmony Gold becomes better at this and that metric relative to El Dorado Gold, we see money go into Harmony, money go out of El Dorado. And then we see the numbers start to switch in the short run, and we see it alter and go back and forth, right? And naturally, when gold goes up, it's going to lift almost all of them. When gold goes down, it's going to deflate almost all of them. But the real movement, comes in how they move relative to each other, right? There are 42 stocks in the sector. We can sort this out. Let's just come in here to stocks that have some decent volume, at least over 100,000. We can afford to go a little higher. Yeah, okay, we'll go to 40. Let's go 50K. Yeah, 50K. All right, gives us 27, right? And if we come in and we sort this by PE ratio, is it going to give us much? No. Right? I mean, yeah, okay, this has a 15 PE ratio. Great, fine. AUI has a 25% PE ratio, or 25 PE ratio, 107. But half the stocks here don't even have a PE ratio, right? And the way these companies report earnings and the way all that happens, PE ratios just don't mean anything. So we can come into valuation, right? We can look at other valuation metrics. What about price to sales, right? The cheapest price to sales right now are NGD and Harmony. Well, these are two stocks that have had a really rough start to 2020, right? I mean, the two best price to sales stocks are two of the worst performers. So, okay. What about price to book? I mean, EGO, El Dorado Gold, really cheap price to book. It's the cheapest price to book, but you can see by this chart, the stock hasn't been doing all that well. Same with NGD. I mean, MGD, great price to sales, great price to book, and the stock keeps falling. So you go, okay, that doesn't really help. What about earnings per share? Right? Let's sort this out by earnings per share next year. El Dorado Gold, they're going to have the biggest earnings per share growth. EGO, man, the stock keeps getting sold. Okay. What about maybe EGO is just a flash in the pan. Well, here's PVG. It's dropping hard. Here's SBGL. All right, it's doing okay. What about BTG? It's not doing anything. What about Goro? It's not doing anything. So looking at the earnings per share next year, does it matter? No, not with gold. Not with gold stocks, right? So let's go look at what does matter. And I pulled up operating margin. And this is the reason that I am bullish on, one of the big reasons that I'm bullish on Barrick. over many of the others, and have been, and we've talked about this element, but the operating margins. As this company has merged and brought other companies under its umbrella, they've been able to knock out some of the costs and increase the margins, right? And that is where you look and you say there's value there that ultimately makes the stock cheaper, and it's ultimately something that could turn a stock that's $15 a share into a stock that's $30 a share, right? And it doesn't mean for everyone. You take a look at Royal Gold, it's it has a good profit margin, right? But it's been falling. There's more to the story than just profit margin or operating margin, I should say. But generally, when it comes to the gold miners, the ones with the best profit or operating margins tend to do the best, right? They tend to be some of the better performing stocks, where some of the ones with the terrible operating margins, like NGD, right? I mean, they had great book value, they had great price to sales, but their operating margins stink. Eldorado Gold, they had great book value, they had great price per sales, but their operating margins stink. So, we will see, or we continue to see money in general in this industry flow from from low operating margin companies to higher operating margin companies. And that has not just been a tendency this year, it has been a long-term tendency for the industry. And when we look at the changes in the industry with some of the mergers and acquisitions and things that have gone on, Barrick has done an awesome job of increasing what their operating margins are through these synergies. I think we could argue Newmont Gold has also done that and been able to, use some of the merger elements to increase the the operating margins there. And I would not be surprised to see some of these companies like Yamana Gold get gobbled up, and get acquired if we see another big uptick in the price of gold, and only go to increase the operating margins for the company that acquires Yamana Gold. All right. So, anyway, that's, to me, that is the investment thesis for Barrick Gold. It's not around the the valuations. It's not around the price of gold per se. Even though, yes, I have a very bullish outlook on the price of gold over the next several years. But it really has to do with why is Barrick Gold on the watch list and not some of the others? Is because Barrick Gold not only has performed well with the algorithm, but it's also one of the best ones in the sector, which means I can expect bigger movement from it, which is what I want from a challenge, from a challenge stock. All right, so that's Barrick Gold. All right, that's Barrick Gold. Now, I'll address one other question that came in with Barrick Gold, and that was on a footnote of it, and it's, why is NVIDIA not part of the challenge watch list? Well, it's not part of the challenge watch list because I did not test it. It wasn't one that I put in the testing basket. I used Micron and whatnot there instead of NVIDIA. Because NVIDIA can be quite erratic, but so can most of these semiconductors. But it is in the test basket right now, and it's been testing pretty well. It got a buy signal. What was that? The third day of February or something like that. And it's performed pretty well. It's had a few buy signals over the course of the last 6 months. But, it's still in that test phase. I can't put everyone on there, right? And it's not the type of algorithm where I can just go out and say, all right, well, let me just take the stocks and the tickers I like and throw it in there. Now, there's a lot that goes into it and, and behind the process there, and working on it with NVIDIA, but it's not there, right? One that I had been working on was GM, and was ready and added it to the watch list here for this challenge. We got a bear signal on it right back here. That signal did very well. I'd love to get another bear signal and go trade it, but we'll see how that happens or see how that comes about. But in all, you'll see me continue to add things as we go forward. But it's also one of those where I don't want to get too many stocks on the watch list at a given time, because then we're dealing with just too many signals, to manage. All right. Now, last thing here before I hop off, we're 30 days into the challenge, which means time for a 30-day summary. And I will do that on Monday. Break down the numbers here for you for the challenge here on Monday. In all, you can see, we're up what? We're up about 60% on the from the challenge starting value, which is slower than I want to see. Right? I'd like to see us up in that 8,000-9,000 area here. But when I look at how the challenge started with Starbucks and Disney and going down to 2,000, and then going, okay, we've grinded now from 2,000 up close to 5,000. Okay, that's been a decent progression there, pretty much since the 13th of January. So in a month, we've essentially gone, we've had a double and a half, which is, not the way I'm going to look at it, overall. But it's, one of the ways I have to look at the start when we have a negative start, due to, something that happens out there. And, in this case, it was the firing of a missile. And, all right, great. We took it, moved on, and, and next. But, I've had a couple good trades, and we'll talk about it. A few kind of Dollar General, one of those, but we'll break that down here with you on Monday. Or, excuse me, Tuesday. My apologies. Thanks for hopping on. Have yourselves a fantastic weekend, and we'll see you next week. Take care.